The markets were pretty choppy last week, but we still got a few nice trades from the daily market breakdown videos. Let's get right into this week's Forex Forecast. Alright, starting this week's Forex Forecast off with the DXY as usual. You can clearly see we have a downtrend now here where we have lower lows on the 4-hour chart. Supply was created, demand was removed here. We are breaking below this upward trend line right now. So that's definitely a pretty bearish sign, at least if you are a day trader. Now, I just want to point out first that we are still in a daily uptrend. So just because, yes, we have seen the past 3 days some weakness in the DXY, remember the overall trend is up. This is why higher time frame analysis, it's a T in the middle, is very, very important. Now, just wanted to remember, I just wanted to point out this daily chart here to show you guys that. But on the weekly chart, we failed to remove this high here. If you guys have been watching my forecast for a while, we've been talking about this weekly high. We would like to see that removed to prove to us that, hey, maybe we are going to push back up to the 110 area on the DXY. We failed to this past week. It doesn't mean we will not continue to go up. I honestly think it is just a temporary pullback, and the reason is, like I said, we have a daily trend. Until we push down, break below that little drop-based rally demand zone here, until we break this trend line, I'm still pretty bullish on the DXY. It doesn't mean we should just be buying the dollar, in my opinion. We still might want to look for confirmation. But going back to the 4-hour chart, yes, we did break below the trend line. We did break demand, but the supply was created at 105.69. So I think it's possible this next week, maybe we see some strength in the dollar, maybe push up to the supply, potentially react off of that supply. But who knows? Since the daily trend is up, I would actually expect this supply to be removed. It doesn't mean we will blast right through it. Obviously, if there's some news release, we could end up blasting right through it. However, if we do push up, I think we will probably see at least, at minimum, a small move before we break up to the upside. But I just want to say, just because we broke below the trend line does not mean we'll just continue to drop down to the 104, 103 area. Like I said, we could actually see some strength as we potentially pull back up to that 4-hour supply. So really on the DXY now, what we have to go off of is that daily trend to the upside, which is signaling strength, and this 4-hour supply. So the trading is all going to revolve around this 4-hour supply zone. If we push up to it, yes, we could be potentially looking for little short trades on the DXY, maybe looking for 1-to-1, 2-to-1s. And if not, and we want to see that removed to basically if this supply gets removed, that would signal to me that that daily trend is in fact still being respected and we will continue to go up. And before we get into the Euro US dollar, I just want to thank you guys all again for continuing to watch the videos and liking the videos as it's getting more ad revenue, which is donated to my local hospice. This past month, we actually ended up donating $90 to hospice from the ad revenue. So it means a lot to me. Much appreciated if you continue to hit that like button, share the videos with your friends to continue to generate more ad revenue for the patients in my local hospice. Like I said, means so much to me, guys. Thank you so much. And on to the euro here. Remember, the trend is down on the daily chart. We did just, in fact, break this supply zone this past day here on Friday, whenever you're watching this video, but the overall trend line is still down, but it doesn't mean we aren't seeing some strength. And if you come over to the 4-hour chart here, you can clearly see nice reaction off of this 4-hour demand zone. This is a demand zone that we pointed out in one of the daily market breakdown videos this past week. So beautiful trade hit, almost 5-to-1, I think, was hit there easily, and that also created a beautiful 4-hour trend to the upside. So in my opinion, with this 4-hour trend line up, I'm not seeing any 4-hour demand zones here, but what this means, since we have that 4-hour trend, is that you can in fact be looking for longs on a 15-minute time frame or even a 5-minute time frame. Both of these time frames are going to be fine to day trade as long as this trend is holding, in my opinion. And the clear profit target, in my opinion, is up to this 4-hour supply at 1.08, where I think we will at least struggle to get down. We will at least struggle to break that supply zone. Since the daily trend is down, this supply zone could actually hold and potentially push price all the way back down. So this could be an area we use for potential short trades, especially if you want to use a confirmation entry style on a 15-minute or a 5-minute chart. So that's pretty much it as far as the euro goes. Like I said, day trading longs is going to be the highest odds situation because we already got the long off of that 4-hour demand zone right there at the 1.06 area. So, but remember, guys, the trend is still down on the daily chart. So in theory, all of this is still counter trend. That's why I pointed out the 4-hour supply above, which we could then look for potential shorts off of that. And then obviously if this trend line in the daily chart ends up getting removed, well, we'll have a different discussion on our hand. Maybe next forecast the daily downward trend line was removed, and then we have to completely switch our narrative here on the euro. But in the meantime, guys, the trend is still down, so we have to be cautious. That's why I'm pointing out, you know, maybe it's best to only look for day trading longs, like I said, on a 15-minute or a 5-minute time frame. Alrighty, on to the forecast for gold. Looking at the weekly chart here first, look at this beautiful trend to the upside. I even was looking at the macro time frames. The trends are all up. Gold is absolutely looking fantastic, especially long term, but that doesn't mean we won't see deep pullbacks, potentially all the way down to the 2050 area, maybe even down to $2,000 an ounce again. I would not be surprised, and not only would I not be surprised, I would not even be worried. Yes, we have seen 2 weeks of downward pressure here on gold, but who cares? Look at the trend. It is up. I welcome a pullback down to the 2219 area. Like, bring it on. I would happily get an entry down there. I'll happily take a loss down here too. I don't mind, because, you know, losing is all part of the game. But just wanted to point out the higher time frames first. We still have profit margin for short trades. Remember, short trades are counter trend. It is higher risk, but at least there's a clear profit target. You could say, hey, look, we could be trading short down a weekly demand, then I'll switch to longs, right? I don't really love doing that. I prefer to just trade with the trend. That's just basically been on with my experience and my back testing. But it doesn't mean we can't get short trades off of some of these zones. And we actually got one here. If you guys remember from last week's forecast, I was long from this demand zone here. I knew this supply zone was coming in control, so I bumped my stop loss up here, ended up hitting my stop loss for a profit. I usually always have my stop loss in the profit, so I'm glad I did that, because look at the pullback we got. And the pullback we got was because of this 4-hour supply zone. And this was a supply zone that we called out in the daily market breakdown video as well. If you guys want access to these daily market breakdown videos throughout the week, they're basically these weekly Forex forecasts, but throughout the week for the members. Check out the Diamond membership. We have Sunday Zoom sessions, video lessons, private Discord group, and much more. So we'd be happy to see all serious traders join the team. We also have lifetime access available. So if you want to catch these trades like this, check out the Diamond membership. So as far as gold goes now, everything is kind of tested here. Tested supply, tested demand. It's not looking great for trading, right? That's why we have these breakdown videos. But anyways, we have a 4-hour downtrend. So what that means is we could be day trading short a 15-minute time frame. I think that would be good with the clear profit margin, like I said, back to the weekly demand at the 2220 area around there. Now, on the 1-hour chart, again, everything is tested here. We've seen a lot of manipulation here. Look at that these 2 candles here. It's just not looking great. So what we could be looking for here on the 1-hour chart, this is proven 1-hour demand. Look how many times we reacted off of it, right? It's still being respected in my opinion. So if we do push down, we break below 2280 at that 1-hour demand zone, any 1-hour supply zone there, we could potentially look for shorts. And like I said, guys, if this happens on Wednesday, we will be pointing out this supply zone there on the 1-hour chart. So that's pretty much it. Waiting for this 1-hour demand zone to be removed to create a 1-hour supply zone to short at. And then in the meantime, even 5-minute shorts are fine, and 15-minute time frame shorts are fine, as long as this trend line is holding. Let's say we push up, break above that trend line, and we create a little 15-minute or 5-minute supply up here. I would kind of stay away, because remember, the weekly and the daily trends are both up, so it is counter trend. But just because it's counter trend doesn't mean we can get a setup. But if this 1-hour trend line breaks, well, then the counter trend setups become even lower odds. The counter trend setups are always lower odds, guys, but it becomes a little bit higher odds when we at least have a downward trend line respecting on the lower time frame. So be weary of that. Be cautious of getting in short if we do break this trend line. But like I said, I think it's fine to be shorting, at least on the day trading time frames. And like I said, wait for this 1-hour demand zone to be removed, and then we could potentially look for shorts, like I said, with profit margin down to the 2220 area. And then at that point, we can switch to longs. Or let's say we push up, we create a nice 4-hour demand zone here. I don't mind looking for longs off of that 4-hour demand zone like that. What I would prefer to see is a move up like here, removing this proven supply that we got a short from, and then any 4-hour demand zone there would be absolutely perfect in my opinion. So I would love to see this price action. That'll probably be for next week's forecast, or maybe this week in the daily market breakdown videos. We will have to see, but a lot of options here in gold. As long as this downward trend line is holding, I would definitely hold off on longs until that 2220 area down at that weekly demand, unless we can break this downward trend line. Remember guys, might be a little bit confusing because I do like to point out both sides of the equation for longs and shorts. So if you guys have any questions at all, do not hesitate to leave a comment down below and I will respond to every single comment. All right, on to the USDJPY forecast. I want to point out the 4-hour chart here first. I would actually call this, in fact, a 4-hour downtrend. But look, guys, this price action has been pretty horrific, in my opinion. Even in the daily market breakdown videos, I've been telling the members, guys, you got to stay away from this chart. It is looking really bad. Just, wick up, wicks down, another wick. Just nothing super clear, in my opinion. So it hasn't really been great this past week. We've seen a lot of choppiness. However, if you look at the higher time frames, you can clearly see we are into this weekly demand zone. It is not great. I don't love this initial move away, but overall, it is basing. It is a move away, and we are pulling back into this demand zone on the weekly chart. There is a better one down below at the 149.05 area. I think we could pull back down to that one, but what makes me think we could be held up here is this daily zone that we are reacting off of right here at 151.85. You've already seen pretty much a picture perfect by the pip reaction off of this daily zone, and the trend is still up. So honestly, I think looking for longs in the USDJPY is going to be fine. It doesn't mean I have just hopped on long just yet. I certainly have not. I actually do not have any open positions at the moment. But if you look on the 1-hour chart, we have a downtrend. We have supply zones being respected. So to keep it simple for you guys here, what I would be looking for, since that daily zone became in control down at the 151.87 area, we want to be looking for longs, but we want to be looking for confirmation. And if you don't know what confirmation is, it is basically looking for confirmation of price turning around on your lower time frame. So since the daily demand is in control, we are now on the H1 chart, which would be our confirmation time frame. I do have videos on my channel and my tips playlist regarding confirmation. I'm not going to go into too much detail here, but basically we want to see this supply removed. This supply removed would be significant because the supply was proven, right? The supply was created by our moving demand. We reacted off the supply and had a nice reaction off of it, almost a 4-to-1, I would say. Off of that supply zone. So if we can remove that supply, that would be our confirmation, and that would be significant in my opinion. So we basically want to see that supply removed, giving us a 1-hour demand zone, and then we could buy a pullback to that 1-hour demand zone. So I'm actually going to set an alert as we potentially break this supply zone, because that's what I want to see on my charts for confirmation, like I said, with that daily demand zone in control. And since the better weekly demand zone is actually lower, it's possible that we do continue to break down. So I just want to warn you guys, losses will happen. We could break this supply, give us 1-hour demand, maybe get a small move off of it, and eventually roll over because maybe the banks want to push price a little bit lower and then react off of that demand zone there. But look, you cannot be scared to trade. We have to take risks, and this would be a risk I would be willing to take if, in fact, we do remove that 1-hour supply zone there. So that's what I'm going to be looking for. Remember, the trends are up, weekly demand's in control, daily demand's in control. I think it's time to look for confirmation, in my opinion. We have to pretty much go with what we have, and what we have are trends to the upside and higher time frame zones in control. So it's really longs all the way. We just need to wait for the confirmation. All right, on to the GBPUSD forecast. Let me know in the comments down below what your thoughts here are on the pound. Do you think it will go up, or do you think it will go down the next week? Let me know in the comments. So as far as the daily chart goes here, I was pointing out this daily supply as pretty much our profit target as we continue to push up at the 1.26 area. So we almost hit it. Look at this wick off of it, though. Clearly, there's a lot of selling up here, so I was correct on that. Now, whenever we see a wick like this, typically we could fill in that wick, hit the supply, and still react. So I still think this is a valid supply zone, in my opinion. So we pretty much have to go with that daily supply in control. The issue that I'm seeing is that confirmation is going to be difficult to get because, remember, since the daily time frame would be our higher time frame in this situation, we want to wait for a 1-hour confirmation. So that would basically look like the removal of this upward trend line like that. So if we do push down, break this 1-hour trend line, leaving us with a 1-hour supply, that would be our potential entry right here. And another thing too is this 1-hour demand zone that we've seen not only 1 but 2 reactions off of. if we can push down, break that demand zone like that, leaving us with a 1 hour supply, that would be good as well. So we don't need both, but I would prefer to see both. Not only the trend line, but the demand as well. But like I said, even if we do, maybe we push down, break the trend line, react off the demand, come back up to the supply, that would be our potential entry here. And if you are bullish, it's a little risky because that daily supply became in control, but we could, in theory, be day trading long this uptrend, but I would only stick to a 5-minute time frame long entry. That's it. I would not go any higher than that because, like I said, that daily supply is in fact in control. So a little risky to get in long at this point. Like I said, day trading longs only. In the meantime, we want to wait for some confirmation on the 1 hour chart. All right, on to the USDCAD forecast. The daily chart, not much is going on. We did create a lower low here. We do have the demand down below. So if you are bearish, which I'm going to point out in a little bit, we do have profit margin down to the 1.35 area. So just wanted to kind of point that out first. As far as zones goes, I'm not really seeing too much except for this demand zone, potentially long trade down here, potential trap set up here as well. So we definitely could see a move off of this demand zone down there. Could be a good area to look for a confirmation on a 15-minute time frame. I think that would be fair. But look at this downward trend line. It's pretty good. I would say that this is a 4-hour downtrend. I don't think anybody would say this is an uptrend or sideways. You know, we did create a lower low. We have a clear peak here. So it is a 4-hour downtrend, which is indicated by this downward arrow. So as long as this downward trend line is holding, I think looking for day trading shorts on a 15-minute or a 5-minute time frame would be completely appropriate in my opinion, with clear profit margin down to the 1.35 area. So, you know, if we get too close to down here and we get a little supply zone here, just make sure there's profit margin, guys. You know, we don't want to really be getting in short right at this significant demand zone. Yes, it's always possible we blow through the demand zone, but look, these zones are respected. Even here, like this demand zone was formed back here. No, we didn't get a huge move off of this demand zone, but look at it was respected, right? So we always got to be cautious of that. That's why I like to point these zones out to you. So yeah, as far as trading it goes now, for longs, I would at least hold off until this 4-hour demand zone at 1.35. Then we could look for maybe confirmation trades. Even just an overall long trade, in my opinion, could be good. And then for shorts, like I said, we have a downtrend on the 4-hour time frame, so which means 15-minute or 5-minute shorts are going to be good as long as this trend line is being respected. And if we break that trend line, then we pretty much have to kind of hold off on shorts until we can create a downward trend line again here on the USDCAD. All right, on to the forecast for the AUDUSD, the Aussie US dollar. So unlike the other currency pairs here, we actually have broken above this this downward trend line. I'm not calling this removed yet, but it's definitely foreshadowing what could be taking place in the other pairs. And look, this thing is looking pretty weak in my opinion. I wouldn't really, yes, the trend is still down in my opinion. However, since we are breaking above the trend line, it definitely makes me a little bit weary of getting in short in my opinion. Now on the 4-hour chart, look at this. Look at this beautiful trend line upside, or trend line to the upside. It's pretty much picture perfect here, guys. Pretty much cannot get any better than that, any more clear than that. So we did actually remove supply up here as well with pretty much no issue. And that actually created a demand zone down at the 0.658 area. This would really be our pullback entry down to this 4-hour demand zone, something like that. Now, it doesn't mean you have to just, you know, put a buy order here with a stop below. It could be looking for extra confirmation on a 15-minute chart or a 5-minute chart to kind of lower, you know, your overall entry. If you look here, if you take the amount of pips, it is about 20 pip stop loss from you know, maybe 22. So if you get a lower time frame entry, you could pretty much take that 22 down to like a 10 or something like that, which could increase your profit margin. Obviously it increases your risk of being stopped out as well, but high risk, high reward, am I right? So, you know, trend line to the upside, pull back to demand zone. I think it's looking pretty good. There is a little basing candle here as well, so it might be a good opportunity to have a wider stop loss in my opinion, just because of that. So I mean, look, I don't want to confuse you guys anymore. Longs all the way, pull back to demand, looks good in my opinion. And look, if we do break this demand zone and the upward trend line as well, any supply zone there could be good, because remember, it is still a daily downtrend, but we pretty much have to go with this 4-hour trend line to the upside right now. And let's say we don't pull back to this 4-hour demand zone, or let's say we do, we react and we break this supply, that's fine, because any 4-hour demand zone there, we could also look for longs in here, just like we would do down here. So quite a few options here. I still think the day trading longs is going to be fine as well here on the AUD/USD. All right, onto the forecast for the USDCHF. On the daily chart here, the trend line is still holding. We did wick below the trend line back into this demand zone. Now, this is a very, very bad demand zone, but it just goes to show 1, 2, 3, 4 reactions off this pretty much horrible demand zone. It barely qualifies. It is certainly not a demand zone like this one down here, this beautiful rally-based rally. It is basically a 1 out of 10 demand zone. And look at how many reactions we've seen off of it. It just goes to show that the worst zones can fail. Or sorry, the worst zones can work and the best zones can fail. But look, the demand is in control right now. The trend is up. Going to the weekly chart, yes, it's very possible we are getting a pullback down to the 0.88 area. It's really all going to revolve around the DXY and what takes place there, but we pretty much have to go off of that. So in my opinion, trading this is going to revolve around these two 4-hour supply zones. If you are bearish and you think we are, maybe, hey, we're going to get that pullback down to the weekly demand zone, I'm expecting a pullback based on my analysis, that's fine. It is counter trend, but there's nothing wrong with trading counter trend. It's just a little bit different than trading with the trend. So it's all going to revolve around this 4-hour supply zone here. This could be an area you look for shorts. I think it could work out. And if not, there's a much better supply zone above that removed a trend line up here at the 0.91 area. So this is definitely the superior supply zone in my opinion. So I'd pretty much be going with either one of these. And let's say you think that that daily demand zone we just reacted off of is going to hold and continue to push up. I would not be looking for longs yet until we can remove that supply zone. So any demand zone here that is formed after that 4-hour supply zone is removed would be our potential long trade. So that is why I said trading long or short is going to all revolve around these two supply zones. So let's say we push up, we don't get a pullback, we break that supply zone, any demand zone there, we also look for trades off of. So whether you are bearish or bullish, these two supply zones are what we are looking for. To kind of summarize again, these could be used for shorts, and if you are bullish, these need to be removed for longs. Last but not least, we are on to crude oil. What a sell-off we have seen here in oil. I'm a little bit surprised. I actually thought, if you go back and watch my forecast from a few weeks ago, I was expecting a move off of this zone. I thought maybe we could push down to like $84 a barrel and eventually we continue to go back up. But when you're wrong, you got to admit you're wrong. And I was wrong on that. And it's more evident here on the daily chart. We had a pretty nice trend line up to the upside. Ended up breaking it, creating a lower low. So things are looking really, really weak right now. I think it's very possible what we are seeing is a pullback down to this daily zone at 74.04. We could then get a reaction off of that. So any short trades, which I'm going to point out here, the profit margin would be down to 74.04. And at that point, I think we could actually maybe switch to a potential long trade there, get a beautiful entry for potentially really great rewards long term. It's a little risky, but we can talk about that when we get there if we do. So in the meantime, we could be looking for shorts. I'm seeing a couple options here. The more risky setup would be at 79.46. It is a decent little drop supply zone that removed demand. So this would be our near-term short entry at 79.46. If you don't feel comfortable with just a entry and a stop above, you could always look for confirmation on those lower time frames right there. And yes, as long as this downward trend line is holding, you could just be looking for 5-minute day trading shorts at any time. And if you want to be a little bit more conservative, we do in fact have a supply zone above on the 4-hour chart. It is not amazing. I mean, I do love the move away. I think the move away is fantastic. I like that it removed demand. However, I don't love this wick, but it's all good. We can't always get 10 out of 10 zones, right, guys? So if we do break that 1-hour supply zone, maybe create a higher high here. A lot of people might, especially on the day trading timeframes, that may be like, oh wow, oil is going up and we got to get in long, but they're going to get crushed by this downward trend line in my opinion. So that would be the more conservative entry short at the 81.06 area. And like I said, we have profit margin all the way down to that daily demand zone that I was pointing out earlier. And let's say we don't, so as far as longs go, guys, I would hold off until we hit that daily demand zone down there. Or if we push up, maybe we break the supply, break the downward trend line, and at that point, any 4-hour demand zone there, we could look for longs. So for longs, we need to see this, or like I said earlier, we need to wait for that pullback down to that daily demand zone, down at the 74.04 area. So that would also be your profit margin down to that demand zone as well. So in the meantime, like there's no trends over here. and there's trends over here, which means the day trading shorts are going to be pretty much fine in my opinion here on crude oil. If you guys want to watch the full length forecast with all the other markets, make sure to subscribe to the channel membership to get access.